Welcome to the Financial Adjustment, where it's all about your bottom line. The place in your business where black is beautiful, bigger is always better, and stamina is the new standard. Today's episode is brought to you by Sync Up Business Services. Providing advisory, consulting, and bookkeeping expertise, Sync Up turns your financial chaos into clarity. Sync Up proudly uses the Surete financial platform. And good afternoon. Welcome everyone to the Financial Adjustment. I am your host, Andrew Clarke, and with me today is my trusty sidekick and right-hand man, Ron Nocera. How's it going, Ron?
Things are going great. The weather's beautiful here. I'm excited to have the program today and talk to Josh.
Yeah, so welcome to the Financial Adjustment, everybody. Today is our inaugural recording. We're here to help small business owners bring the F back to small business finance. And with that F being today, it's going to be fun. We're going to have fun with this. We're going to introduce you to some people who are going to tell us about the things that they do in their specialty over the course of this series. And we're going to help you with your small business. So, Ron, you met somebody really, really interesting a few months ago. Tell us a little about our guest today.
Josh Hollum's a great guy. He works for a company called TaxCredible. And what they do is they help companies find tax credits that no one knows about, that CPAs don't even know about.
I don't think
And
I know
most
about them.
businesses don't know they're there.
Wow, that's exciting. Maybe I'll get a little bit of knowledge out of today's show as well. So with that, let's bring out Josh. As Ron said, Josh is with TaxCredible. Josh, welcome to the show.
Thank you guys for having me. Excited to be here.
We're excited to hear what you're bringing today because Ron said that you had some information about tax credits a lot
That's
of
correct.
small businesses are not aware of. So I have to ask, Josh, what's a tax credit? I mean, I hear about tax incentives, I hear tax laws. Everything these days is taxes, taxes, taxes. What's a tax credit?
Yeah, great question and great way to start, Andrew. A tax credit essentially is a dollar for dollar offset against a company's tax liability, which will in turn improve their cash flow. So we find a tax credit. Let's say they have $100,000 in tax liability. We find a tax credit of $50,000. Now their tax liability is $50,000. Much different. Most people are familiar with the deduction, not a deduction. Big distinction there.
Yeah, that's what I was going to say. That's what I was thinking. A lot of times I heard that term tax credit as opposed to a tax deduction.
Right.
Okay, so the tax deduction is what I take off of where I adjust my adjustable gross income. I bring it down so I can pay less in taxes. Whereas
Correct.
this tax credit actually is if I owe, like you said, $50,000 in taxes, but then you find me a tax credit of $20,000, now I just lowered my taxes from $50,000 to $30,000.
That's correct.
Oh, wow. That's awesome. So tell me about these credits. What kinds of credits are there and who are they available to?
Sure. TaxCredible's been in business for 25 years, been doing this for a long time. We handle a couple of Georgia state tax credits and some federal tax credits. On the state side, we handle the retraining tax credit, the job tax credit, and the investment tax credit.
Okay.
The retraining tax credit is tied to software and equipment. So if a company invests in software or equipment, there is a tax credit for that.
Okay. So now any kind of software, is this just like a specific type of software or hardware? How does that work?
Anything with the exception of mass-produced software. So Microsoft Office is not going to count, but anything else is going to most likely qualify for the tax credit. So think of things like HR payroll and CRM systems and warehouse management. For our medical clients, they've got electronic medical records and EHR and so on and so forth. I mean, the list goes on. I'm not going to keep naming systems because we'll be here all day, but even proprietary software that you've created will count. Yeah.
Now, how does this work? So I train my employees and then I do some sort of a calculation. How does that work? Do I calculate it or do you calculate it?
No, that's where we come in. My team does all the heavy lifting. What we do is we sit down with you, the business owner, and we gather some data from you. And then my team takes it from there. We do all the data gathering, all the calculations. We submit it to state for approval because it does have to go to state for approval. And on that note, we're the largest submitter to the state for this tax credit. So again, we've been doing this a
Wow.
long time. We're the experts in this credit. But
Okay.
we submit it to the state for approval. Once it comes back approved, we then deliver that in a nice, neat package with a bow to you, along with your CPA. And if your CPA is unfamiliar, we can help him or her with where it goes in the return.
Now, you said that this is for the state, and I know that you're based out of the Atlanta, Georgia area. Do you
Correct.
have tax credits that are available to folks in other states?
Unfortunately, not all states are created equal. So not every state is as tax friendly as Georgia.
Mhm.
So there are some states that have different credits, but not every state has the same stuff. So this particular credit is not everywhere.
But it is available in certain states, and you said that there are some federal programs as well. Is that right?
Correct. Yep. So on the federal side, we do the research and development (R&D) tax credit. Now
Okay.
that's a federal credit. That's any company in the United States.
Does it matter on time in terms of like the size or the specialty or the organization and structure of the business, or does this apply across the board?
It applies across the board. If you're an entity that's paying taxes, you can qualify for tax credits.
That's pretty cool. Ron, you've got a business, right?
I do. And one thing I was wondering too, I started my business last year. How far back can I go? Is it just for the current tax year you're in, or can you go backwards?
You can go back depending on the credit. So if we're talking about the retraining tax credit, you're able to go back 12 months from your last year's filing. So depending on when you filed last year, 12 months from that time period.
Okay.
Yep.
I'm just surprised that this isn't well known. This seems like it would be something that all businesses could take advantage of, but it's almost like a hidden surprise.
It is. That's a great way to describe it. All businesses can qualify for this and should be looking at it. I'm grateful because, if they all knew that, I'd probably be out of a job. But my job is to go out and educate and then vet the opportunity.
Does this change on a year-to-year basis? Does it change with each administration that takes office, or has this been running consistent for some time now?
Great question. It's been running consistent for 30 years.
30 years.
Yeah, there's always talk about taking it off, but to me, it's not going to happen. Again, that's just my humble opinion, but that's going to harm businesses. The whole purpose of that is to attract businesses to the state. So why would you take away a credit that's going to incentivize businesses to come here?
Oh, okay. So one of the features, it sounds like, of these tax credits could be to incentivize business to relocate their business from one state to another.
Absolutely. And
Okay.
Georgia's very friendly in terms of tax credits for businesses, very tax friendly.
Okay. Now, do we find, with all the things that are going on along the West Coast, a lot of companies are fleeing the West Coast and they're coming to just to other states, right? Anywhere but the West
Yeah,
Coast. Are you seeing an influx of that in your
we are.
business? You are.
Absolutely. Yeah. Companies are setting up, they're fleeing, California and going to states that have no income tax like Texas or places like Georgia who are very tax friendly.
Okay.
And the other benefit too is you can have a company that's headquartered in California or Texas or wherever. If they have a location in Georgia, that location will qualify for the credit. So it doesn't have to be
Oh,
company
okay.
wide. It can be based on location.
Well, that's a good deal. So that
Yeah,
means if somebody has even a multi-state or a national company, doesn't make a difference where the headquarters is located. It makes a difference where the employees are located.
correct.
So that could potentially, and you correct me if I'm wrong, for a state or company that has locations in multiple states, assuming that this credit was available in each one of those states, would they be able to apply multiple times for each state for the employees living in that state?
Absolutely. Not every state has it, but I know if they have a location in Georgia, they're going to qualify.
Now,
Yeah.
tell me in terms of size of business. You said it didn't make a difference the size of the business, right?
No, I mean, technically, any business that has employees and pays taxes can qualify for it. So, for it to make sense to work with us, we're looking for a minimum of 10 employees because that's where it makes sense to bring us on up from there.
Okay. Does it matter revenue wise? Like, for example, some people have 10 employees and they're making $1 million a year, whereas another company might have 10 employees and they're making $100,000 a year. Does that matter?
It doesn't matter because the tax credit's going to be relative to your business. A great example, I have an HVAC company. The guy had 4 employees that qualified for the credit. We ended up getting them a $5,000 tax credit this year. He was jumping for joy because, again, it's relative to the size of his business.
Yeah,
On the
absolutely.
flip side of that, I have an auto dealership who's much, much larger, much higher volume in revenue. They had a couple hundred employees. We got them $175,000 in tax credits.
Wow.
They were also jumping for joy, but again, it's relative.
And is this year over year, or you get the tax credit once,
No,
one and done?
it's year over year. And again, this is going to depend on the nature of your business and the activities, but we see nowadays with software, most companies, depending on their industry, are going to qualify year over year. Auto dealerships are a great example because of the nature of their business. Medical practices, they're typically year over year because compliance and HIPAA and all that stuff. There's
Uh-huh.
always something that's going to come out from
Yeah.
the software, from the vendor. One thing to note is it doesn't have to be new software. It can be existing software that's been upgraded. You typically see an upgrade come from the vendor.
Mhm.
That's what triggers a qualifying event.
So if a company has a software in place, like just say, for example, a large accounting firm, right?
Yep.
And they have this software they use that's proprietary software, and they're getting constant releases because tax codes change, blah, blah, blah. Every year they're having to retrain their employees. So would they be eligible to reapply in that case?
Absolutely. Yep. And a lot of our clients are repeat business because of that.
This sounds almost too good to be true. How expensive are your services?
Ron, I hear that a lot, and I have a cheesy response to that, but it's true. It's not too good to be true. It's too good to be free. Yeah. So cheesy, but to your point, Ron, so we work on a contingent basis. If we are unable to capture credit, it doesn't cost you a dime. If we do capture credit, we charge a fee based on that credit. That's how we're paid.
So literally, I don't have to come out of pocket until actually you find me some money.
Not until we find you money, send it to the state and it's been approved. If we're not sure about the credit or if you're not getting it, we're not getting paid.
So it's almost like a guaranteed deal before I have to stroke a check.
Yeah.
So why do you have free time? I don't understand why any business wouldn't want to. Why isn't your phone ringing off the hook? I don't understand that.
It's a great question, Ron. One of the reasons is, like you mentioned at the beginning, it's just unknown that so many people, when I hear, they're like, I didn't know this existed. There's also a problem in the market with an incorrect assumption. Well, my CPA will handle that. CPAs don't have the time or the resources to dedicate to what we do. It's why our business model exists. That's why they bring us in.
That's interesting. Because I work with lots of CPAs within SyncUp. We work with lots of CPAs. We work with CPAs that are solo entrepreneurs. We work with CPAs that are with firms. I can tell you, I've never heard any one of the CPAs mention tax credits. Never. It's always tax deductions, but never. Have you, Ron?
I have not either. And I started talking to a lot of CPAs as well. I mean, this is new to me, but I don't understand why it's not so widely known because there seems to be no downside. There doesn't seem to be a downside as far as it's not expensive. It doesn't cost you anything until you do realize the credit. Why wouldn't you do it? It just kind of blows my mind.
Yep. Well, and that's the thing too. It's not required to file your return, right? So your CPA is so busy doing everything else to get the whole return completed in time and under a deadline. This is not a requirement, and it is labor intensive. So they just don't have the time or the resources to dedicate to it. That's why our business model exists. But they bring us in. So if CPAs are aware of it, and know of us, then that's where we can really be a true value add to that firm and that client. CPAs also love the relationship because it's a win-win. They're a hero to their clients for reducing taxes, improving cash flow. We don't cost them a dime, so there's no overhead to the CPA for that.
Very, very interesting. Well, Josh, this has been very, very enlightening. I mean, I've learned a lot today. Ron, you?
I've learned an incredible amount. I mean, this has been a great conversation.
And I think the best thing is you put the F in finance today when you said free. It doesn't cost me a penny until after you found the deduction. I mean, hey, thanks for that. So,
Right.
Josh, tell our listeners how they can get in touch with you so that they can get the ball rolling.
Sure. You can email me, josh.hollum, josh.hollum at taxcredible.com. You can visit us on the web at taxcredible.com. You can find me on LinkedIn, Josh Hollum. And you can also call my cell phone because guess what? I'm old school. I will answer the thing. I will pick it up. My cell phone number is 404-935-1086. Again, 404-935-1086. Call me.
Awesome.
I will answer.
Josh, it has been a true pleasure. So glad that you came to the show. We appreciate you spending some time with us, giving us lots of advice, lots of insight, juicy stuff.
Thanks for having me, guys. I appreciate it.
He certainly put the F back in finance today for us, didn't he, Ron?
He did. And that F could be facts. It could be fun. It could be found money.
Yeah, but the thing for me is it's free. His services are free until he finds me money.
Finds me money.
Oh, yeah, for sure. Well, you know what, Ron, we need to make sure that we get the word out to our clients and to the folks that you run into as you're going about your day. This has really, really been interesting. Josh, thank you so much for joining us today. In our next episode, we're going to be speaking with a merchant services provider, a father-son team who started a company several years ago. And what they specialize in is merchant services. That's where you take your client's money, point of sale, and they help you find ways to save money doing that. So it's not all going to the bank. Again, I'm your host, Andrew Clarke with Sync Up Business Services, joined by my partner, Ron Nocera, and we look forward to seeing you on the next show.
Thanks, everyone.